All right, Ren, it is time for...
Hit my portfolio. Hit my portfolio.
Easily my favourite sting and fast becoming my favourite segment here at Equity Mates in 2024. Pimp My Portfolio, where we get an expert to look at the portfolios of the Equity Mates community. We've got Luke Laretive in the studio with us. Luke.
Gentlemen, how are you?
Very well. How are you?
Alive.
Nice.
Alive.
We're not going to ask about that. We're not going to ask about that. But looking forward to this segment. Luke is back, and we've got plenty to get through today, and it is our pleasure to welcome into the hot seat Heath from the Equity Mates community, one of the most active members in our Facebook group as well. Cannot wait for this one. Heath, welcome.
Good morning. Thank you, gents.
Now, Heath, I'm going to give a bit of a spiel on your portfolio, then Luke's going to hit you with what he has named it. So for everyone listening along at home, Heath has a concentrated portfolio of individual stocks. I don't think there is one ETF in here. I'm based on the conversations that you do in the Equity Mates community. You put a fair amount of time into researching these. So I'm looking forward to understanding how that happens. But you've got some big tech names in there: Amazon, Salesforce. You've got some retail, Visa, Ordinate here on the ASX. A mix of US and Aussie stocks. A lot of recognizable names, but no ETFs. So that's what we're looking forward to today. So, Luke.
Down and dirty, boys. Let's go.
What is the name that you've given to Heath's portfolio?
It's the curse of success.
The curse of success.
Okay. Can't just... Yeah, okay. All right.
It's probably not a curse, but, I needed a name. I'm running dry on names. My creativity's not very good.
We've done like 3 of these.
I know. I'm battling. I came out of the blocks too hard.
Do you have some context to give to that for Heath to respond to? Or
Yeah, Heath's doing really well. So let's... start there. He's made some pretty good dough investing in the markets, and we can get to some context in a minute and give me a bit more of an understanding of how that sort of happened and the process that's gone in behind that. But from someone who's running a concentrated portfolio, like the weights are kind of ballparky right. I don't know about whether the diversification's necessarily there, and that would be my kind of primary concern, I suppose. But I think if we're talking about what's worked, it's about how do we make sure that we don't give back all those gains. It's fine if you're running a portfolio to have high sensitivity to a particular sector or have a particular thematic that you want to leverage and take advantage of. But there is a time when you don't want to do that anymore. And so I just want to sort of maybe go through some of those sort of things.
So Heath, with that context in mind, how does that sort of feel in terms of your portfolio?
Luke's name is spot on. Curse of success. I've had a bit of luck. Portfolio's doing reasonably well right now. The problem I have is having to remind myself that I'm not Warren Buffett, and this could be as much good luck as good planning, and trying to find that point where, is this stock a hold? Should I be selling and taking a bit of profit? That whole idea of looking for bottom drawer stocks and ignoring when they get a little bit pricey if you've got that long-term conviction. It's a really difficult one to make when you're sitting on healthy returns. Just given how quickly the market can turn.
Mate, you've done it exceptionally well. I had a quick sniff, and if this has been your whole portfolio, which I'm assuming it hasn't been, I'm sure you've sold something over the journey, but you're running a 76% win rate. So
nice.
Yeah. Okay. So now
maybe this is the baby Buffett. Okay.
Maybe, but I'm going to tell you that I can
trust me. Full disclosure, gents. That is the current portfolio holdings. There have been plenty of dogs and losers that are no longer there.
Yeah. Okay. But look, even by the by, that level of success in a portfolio isn't what I want to see. Right? You want it to be. It's not sustainable to run like that at those kind of rates.
Yeah.
So. The caution I wanted to give was and you've identified it yourself, Heath. So it's probably not not that insightful, but is the overconfidence that can happen if you happen to time when you decide to start investing, and the kind of stocks you start investing in, which that might be in banks at a certain time. It could be tech stocks. It could be anything, mining, and you think that you're a genius because it's been going well for a while, and then you kind of give it all back. The overconfidence type sort of bias. So I would just like to temper any of that by saying that I had a look at some of the other fund managers that run what I would call similar strategies to this, pretty focused on tech, pretty concentrated, global focused, developed market focused, playing some of these big themes that are kind of in Heath's portfolio. I liken it to, Munro, Hyperion, Lakehouse Capital. Now those, I just pulled those three off my database,
Yep.
but that's 50 over the last 12 months, they've done 51, 63 and 42% respectively. So they've all gone lights out over the last 12 months. Their long-term numbers are like 7 to 13% per annum. So that's where you're going to go, Heath, if you can keep emulating those sort of portfolios and those sort of returns. I'd probably argue you can't, but that's just my opinion. I don't know, maybe you are the second coming of Nick Griffin, but I'm not sure. But all I would say is that understand where you're at, be stoked, like be happy with it, and start thinking about not getting out of the market, but just diversifying your gains. That's kind of how I like to get rid of capital gains, is to not get out of the market, but just take away the concentration risk.
So
Makes sense.
So we want to leave with some, I guess, like actionable insights for Heath to go away and think about. How would you think about doing that? Diversifying the portfolio, adding some resilience to it potentially. And Heath, maybe you don't want to. Maybe you want to keep trying your hand. But if you were going to follow what Luke was talking about, how would he go about it?
I would start by thinking about, okay, which of these stocks, I mean, if you're good enough to buy a stock, you need to be good enough to sell it. And that'd be my biggest learning from doing these Pimp My Portfolios with the Equity Mates community over the last couple of weeks, is that everybody's good at buying. Nobody's good at selling, right? And unfortunately, in this business, you've got to be able to do both. And I think figure out, he's probably good enough to do it if he's got here on his own, what price he should be selling some of these stocks at. And if you need help, I'm happy to sit down with you and do this. We can figure something out that works for both of us. But I would just be looking at where I can take some gains, what's looking a bit expensive, what have I got a lot of dough tied up in, and I can still keep exposure, but I can halve my position quite comfortably, or third my position quite comfortably, and start to just reinvest that either in, if you want to stay, stocks and global, a broad-based index ETF or an active manager who's running a different sort of strategy that's not one of those three that I just mentioned. I would like to see, whether you're great at this, Heath, or you're going to start to sort of bring in experts to help you. I want to see, even in our portfolios, the way that I generate returns, that's great. But we still employ other managers to generate returns the way that they do that's different to me. Yep. You want to be sort of driving your, essentially making money from a different strategy, different sources at different times, so that you kind of have that proper diversification. So I'd be heading there, particularly if this is a big chunk of Heath's money, which, maybe it is, maybe it isn't. But, I'd really like to see some diverse sources of growth and profit here. I'd really like to see some, other styles, some value, some quality. There's other ways you can invest dough. And also probably when the money starts to get a bit more serious for you, some more asset classes, not just equities and not just global large cap, and then a couple of fundy darling stocks, which, we can talk about my views on WiseTech till the cows come home, Heath, but we'll save that for another day.
Yeah, no, give us your 60-second or less WiseTech.
Okay, let's not talk about WiseTech specifically. Let's just say Ordinate WiseTech are trading on 60 times earnings, EV to EBITDA, right? Huge multiple. There are businesses that you can buy, I would argue, that might not have the same history of success, but look like they're going to have a future of success that looks something like that. I would say one of the big positions we've got in our portfolio is Webjet. Whilst it hasn't always generated a 30% return on invested capital, we think that it can grow 30% per annum, and probably will get to similar returns on invested capital that WiseTech and Ordinate are on. But it's trading at 15 or 20 times EV to EBITDA.
Heath, have you thought about where to from here with your portfolio? Some of the positions you're up almost 200% on, a lot of double-digit returns on a lot of you, as Luke said, 76% hit rate or whatever it might be. Have you thought about where to go with some of these stocks?
Absolutely, yeah. I have some investments in property which I'll be cashing out shortly, and the intent is not to double down on these existing holdings. I do want to try and build something of an actual core portfolio, and so of course, just talking about general names and like that, that's looking at things like VDHG, Qual, Moat, maybe VGS, those sort of things. I found it reasonably. I found I've been able to reasonably go against the market when good companies are out of favour. That's when I picked up Ordinate, for example, back in 2022. You hit the nail on the head, though. I do struggle to sell when things are going really well. I have that fear of, if I sell it now, am I missing out on decades worth of growth? But realistically, listening to you guys and a lot of the other good, podcasters out there that are talking about all of those, mental models that you can apply and, those individual biases that can hold you back, it helps check yourself. Stop, think about what you're doing, and make fewer mistakes than you would otherwise.
I think that's half the battle is people find companies that they like the story of, and they're buying on the back of a story, and they might do what Heath's done and wait for the market to fall out of love with it for whatever reason, and maybe it's an earnings blip or whatever. They see that recovering and they buy really well. I think the selling side is much more difficult because momentum can continue for a long time, and stocks can stay expensive for a long time. I don't think there's been any time in the last 5 or 7 years when I've looked at WiseTech and thought, wow, that's a steal. It always looks expensive because it is kind of a good business.
Yeah, but wasn't that the story about Amazon for 20 years? It looked expensive, but it just kept growing.
Yeah, look, I think
and it's still the story about Pro Medicus.
Yeah, that's a good one. Yeah.
Look, it's not the kind of, as I said to you, there's lots of ways to generate returns in the market and lots of styles of investors. Buying stuff on 60 times EV to EBITDA is just not my style as a general comment, unless it owns a category and unless it's a category killer, essentially. So, there are businesses. Amazon's got 50-something% of retail in the US. It's a category killer. So, you need to be able to identify, genuine global growing addressable market and scale and monopoly versus not.
Yeah. Versus a great story.
A good read.
Yeah.
Well, Heath, we have run out of time, so I just want to say, I guess, congrats on such a successful portfolio to date, and a big thank you to the effort and contribution that you make to the Facebook group. You certainly are helping everyone in there learn a bit about the strategies that you put in place. So if you're not part of the community on Facebook, come and join us and join the discussion. So we will leave it there. I hope Luke's been able to give you a few things to think about. I'm sure there's plenty to unpack.
It's a good portfolio. It's a good one to do. So I'm really stoked with it. Well done, Heath.
Thanks, gents. I really appreciated it.
No worries. If you want to submit to Pimp My Portfolio as well, head to equitymates.com/contact and you can submit your portfolio, or we can connect you with Luke if you'd like to have a one-on-one with him in your own time to get his thoughts. But we'll leave it there. Thanks, Heath.
Nice one, Heath.
Thanks, guys.
Thanks, mate.
Thanks for that. Epic.
My portfolio.
Bye.
Bye-bye.